Carlos Torres, the chairman of BBVA. Thank you so much for joining us this morning. Look, you're talking about the biggest transaction in European banking this year, a 10 billion euro bid for Banco Sabadell, talking about 850 million euros in annual savings. Walk us through the numbers there. How do you get to 850 million?
Well, the bulk of the savings have to do with technology savings and overall general expenses. The banking sector is undergoing a process whereby, because of digital, because of the importance of cyber protection, availability needs, preventing data loss, data fraud, data theft, I should say, and meeting all the stringent requirements that the EBA puts on the banks, all of that, plus the data and AI wave that we're under, all of that increases the weight of technology, and technology is fixed cost. So by being larger, having larger scale, you can spread that fixed cost over a bigger business and therefore be more efficient. That's where the bulk of the synergies take place.
So how much of the 850 million is going into those fixed costs?
So 100 of the 850 have to do with funding, and the other 750 have to do with costs. The bulk of it, as I say, is technology and general expenses, and the remainder have to do with personnel.
And in terms of those fixed costs, that is a very big upfront expenditure right now. You're seeing that across every corporate, not just the banking sector, not just BBVA itself. Are you prepared to take on that upfront cost?
You mean in terms of investing in technology? Yes, in fact, our efficiency levels have continuously improved despite the digitization. So the fixed costs increase, but it allows us to be more efficient. Both things are compatible. And the same will be true now in the age of AI. By adopting that technology, we're going to increase efficiency as well.
So it feels like this is all good and well in the context of the conversation for scale, but not everyone views your takeover bid for Sabadell in the same way. They're calling it a hostile takeover bid. There isn't that kind of friendliness and that support from the government, from some of the regulatory agencies. What do you say to that?
Well, first I would say that our bid has always been, our offer, our proposal to Sabadell, first to merge and then the offer to the shareholders, has always been extremely friendly. You may call it unsolicited. Yes, it's an unsolicited bid, but there is no hostility in making this approach. We are extending the offer to the shareholders, to the real owners of the shares. And in that respect, we believe that given the attractiveness of the offer, it's a good thing for the Sabadell shareholders to have this option to choose to tender the shares to BBVA. This is what I would tell them.
Well, so what do you think? Put yourself in their shoes. What do you think their hesitation is right now?
Well, what we have heard is from the Sabadell board. We are still yet to hear from the Sabadell shareholders. And judging from the Bloomberg screen, the market right now believes that the offer that BBVA has presented is worth more than Sabadell standalone. In that sense, the market disagrees with the Sabadell board, and we believe that the shareholders will very likely tender their shares when the time comes, after the regulatory approvals are obtained.
You're talking about a merger here, though. What happens if you just have a stake? How profitable is this then?
Well, I think it's worth going through the process that we have ahead of us. The first thing that will happen is the extraordinary general meeting of the BBVA. This is where the shareholders of BBVA will need to approve the capital increase. This will happen next Friday, so July 5th. And we're very confident that we have broad support from the retail side as well as the institutional investors for the EGM to approve our capital increase. In parallel, we have filed with the ECB for their approval, which has to do with prudential supervision. We don't foresee any obstacles for their no opposition to the deal. In parallel, we have also filed with competition authorities in different places, most prominently in Spain, the CNMC. They have a very clear methodology. They have a very clear application of that methodology in precedent transactions. And we know the outcome of that application in transactions that are quite recent, that are even of larger size. So also we're confident that of the outcome of that process of analysis of the impact of the transaction on the competition levels. And then there will be the time for the shareholders of Sabadell to make their decision as to whether they want to tender or not. We believe they will be tendering because of the attractiveness of the transaction. And that will leave us, this is the real probable scenario that we are facing, is that we will end up owning the majority of shares of Sabadell, in which case we will want to embark on the merger and this is the base case. This is what we're looking in front of us. If for some reason were that merger not to happen, would be unprecedented, we still believe the transaction has merits, and most of the synergies, we would be able to capture most of the synergies.
So that is all on the assumption that 1, you have your ducks on a row, 2, this gets approved, or 3, that you even are able to be left with a stake, if not a merger. What if you're wrong?
Well, if we're wrong, and for example, the Sabadell shareholders decide not to tender, which I think is the key critical decision maker, apart from the other decision makers I just covered, BBVA would continue with the momentum, the positive momentum that the bank has. We had a 17.7% return on tangible equity in the first quarter. We have a 20% increase in tangible book value per share in the last 12 months. And this has continued for a few years now. And on both metrics, we're top of the league in European banking among our peers. Also, on the other dimension that matters, which is growth, if we look at the growth of our loan book, we're talking about 9.5% growth in constant euro terms, 7% in current euro terms. So on growth, on returns, we're top of the league, and BBVA would continue in that improbable scenario, the good momentum, the good course in which we're on.
So one of the criticisms of this deal is the value of it, and that this isn't a juicy enough offer. Would you consider raising your value?
We have presented a knockout offer to the Sabadell shareholders. It's a premium of 50% over the 3 months prior to the presentation of the transaction. On top of that juicy premium, we're very rich. The offer is an offer in shares, which means that the Sabadell shareholders will participate with a 16% ownership on the combined entity. And that means participating on the value of the synergies, the 850 million euro per year cost savings, which represent multi-billion-dollar value. 60% of that multi-billion-dollar value will accrue to the Sabadell shareholders. And maybe the summary of it all is the earnings per share accretion that you can calculate is 27% increase in earnings per share for the Sabadell shareholders. It's a very, very attractive offer that we're sure will convince the shareholders to tender their shares.
So no appetite then to sweeten the deal. This is your final offer.
As I said, we have no intention and we have no need to improve the offer. It's very rich comparing with precedents. The market is also telling us that the offer is worth more than Sabadell standalone, and that's why we are not changing it.
Talk to us about your exposure to markets outside of Spain, specifically in Mexico, Argentina, Turkey. There's a very scary, risky geopolitical environment right now. Why are you so confident that this is a lucrative story in the long run?
Well, starting with Mexico, maybe we should start with Spain. It's a very attractive market, and it's one of the reasons also for doing this combination. It's a great combination. It's a great combination for shareholders, but also for Spain. It's a great combination for clients, for employees of both banks. Employees
Only
and clients
because
of both
it's
banks.
Outperforming right now, though. Spain hasn't traditionally been as the winner in Europe.
Well, Spain is set to grow at 2.5% this year, when Europe is growing 0.7%. Next year, 2.1%, when Europe is growing, we hope, 1.4%. So significantly higher rates of growth on the back of population growth, employment numbers, record level, tourist revenues are very strong, non-tourist exports, very strong. I could go on. Spain has really good performance on the macro level. Also, we're set to see credit increasing in penetration, credit penetration increasing after many years of deleveraging. Spain has deleveraged 35 percentage points in terms of the debt over GDP, both on the household level as well as on the corporate segment, etc. So Spain, very positive story. Mexico, very positive story. The nearshoring phenomenon will continue because the clash of blocks, US, China, is not going to go away. And the nearshoring is the solution. We see a big demand from Asian companies, from North American companies to invest in Mexico, and that will continue for many years to come. Turkey also has turned the corner after many years of difficulty with inflation, devaluation, but now we're seeing an influx of capital into Turkey. We have seen the central bank accumulate tens of billions of dollars in reserves. So we expect inflation in Turkey to start coming down quite fast in the second half of this year.
Yeah.
And then it will resume its good growth trajectory. It has huge potential.
Yeah. What's your red line here? When it comes to the Sabadell deal, what's your red line?
Red line meaning what, sorry?
Red line. Why? What would it take to walk away? Red line.
Well, we need to wait for the process to go on. There's really no decisions on our side other than to go through the motions of the July 5th EGM, the regulatory approvals from the CNMC and from the ECB, and then to wait for the shareholders of Sabadell to decide. In the process, we'll be addressing the concerns that have been expressed by government, for example, and we're quite confident that also we have a good history of working together with this very same minister in tackling concerns that he had in the past around the seniors, around access to banking in rural areas. Similarly, whatever concerns might arise because of this transaction, we're confident we can work together to address them.
Well, one of the concerns, we were just talking about the outperformance in Spain, one of the concerns from the Antitrust authority in Spain is what that does for the actual effect to Spanish consumers. For example, if you have consolidation with some of these banks, it makes the transition mechanism in terms of interest rates to actual saving rates a little trickier. You've seen that in other parts of Europe as well. What do you say to that?
I say that Spanish banking sector is highly competitive, and you can compare that in terms of many variables, including the transmission of monetary policy. Yes, on the deposit side, there are other factors that have influenced the excess liquidity, but on the credit side, it's very clear, and the credit rates are much more competitive than many other markets in Europe. It's a very contested market. We have the digital players that come in with strength.
Yeah.
Some traditional players are leveraging digital in a very good way to be strong competitors. Then we have the new entrants, and this will continue. And what we have seen is that by having stronger banks, there has been a process of consolidation in Spain and concentration, but that has meant that banks are much more efficient today and we're better able to serve customers. That's why we believe that this combination will be better for Spain, for clients of both entities. For society in general, it will increase lending volumes by 5 billion euro per year. That's our calculation, because of being more efficient. So far from being an anti-competitive deal, is, in our view, pro-competitive.
Final question to you outside of the Sabadell story. Let's talk about Germany for a second. You have a background in digital banking. You're very passionate about it, clearly, and the expansion of that technology. Germany is a really tricky market for a lot of various reasons, and especially for digital banking, because there's so many players involved, all trying to get access to a very lucrative pool. It's resulted in over 1,000 players that are proving not as profitable and not as efficient as in other parts of Europe. Why can you make that work?
Well, we are being very successful in Italy, and the beauty of the way BBVA does digital banking in markets where we have not been present until now in the retail space, like Italy or Germany, is that we do it leveraging the full technology stack and operation stack of BBVA in Spain. So it's purely marginal cost. It's really extending something we have already built. And once we have prepared it to have it in several countries, which we have done when we entered Italy a couple of years ago, we can replicate that now in other markets. So the marginal investment is much reduced, nothing like what other digital players might need to make. And we already have the full product suite. So in Italy, we have the full product suite. We're starting with mortgages soon, which is the last that we needed to complete the full product set. So now in Germany, we can be fast to market with low marginal cost.
Your argument on the Sabadell story is economies of scale. You are not the biggest player in Germany when it comes to that digital banking story. Is that a hurdle?
No, because the scale we're talking about is the scale of BBVA in general. Because precisely what we're doing this is digitally. So the marginal cost is very low, precisely because it's all fixed cost. So we're leveraging the scale that BBVA already has, in particular in Spain, as I say, is the technology stack, is the operation stack in Spain. For example, the operations of BBVA Italy, it's the same factory we have in Malaga doing the operations of BBVA Spain, and this is the same factory will be doing the operations of BBVA in Germany. So the scale that you need to consider is not the local market, but the overall scale. This will be more and more important as all developments, digital developments travel across borders, the same as the digital players, all the big techs, etc. They don't have development for every country, and you don't consider the scale in every country. You need to consider the scale much more at a global level. And this is also where it's important to have large players, European players that can play in the overall global landscape.